There's one line that institutions genuinely care about because it tells them whether they're winning or losing on a position. VWAP, the volume weighted average price. For swing traders, the powerful version is anchored VWAP pinned to a meaningful event. Get this right, and you've got a dynamic level that big money is actively defending. Let me show you what it is and how to use it. Regular VWAP averages price weighted by volume over a single session and resets each day. Anchored VWAP lets you fix the starting point to a moment that matters, an earnings gap, a major swing low, the start of a rally, and tracks the true average price everyone has paid since that event. Because it's volume weighted, it represents where the real money actually changed hands, not just where price drifted. That makes it the market's collective cost basis from the anchor. Here's why it acts as support and resistance. When price is above the anchored VWAP, everyone who bought since the anchor is, on average, in profit. They're comfortable and willing to defend the position. So pullbacks to the line get bought. When price is below it, the average buyer is underwater and rallies into the line get sold by people just trying to get back to break even. So in an uptrend, the anchored VWAP becomes a rising floor you can buy pullbacks against, with your stop just below it. This is the mental shift. A moving average is just math on price. Anchored VWAP is the actual average cost of everyone involved since a specific event, so it carries real psychological weight. The skill is choosing the anchor, the bottom of a big sell-off, the candle after earnings, the start of a new leg. Anchor it to the moment that reset the stock story, and the line marks where conviction lives. On real price anchored from a swing low, watch how pullbacks repeatedly find support at the rising VWAP while the trend is healthy, and how a decisive break below it often marks the point where control changes hands. That gives the swing trader a clean, repeatable plan. In an uptrend, by the dips to the anchored VWAP, when price loses it and can't reclaim it, the easy long trade is over. Place it correctly. Anchored VWA is a key level signal in the Confluence method, a dynamic one that moves with the trade rather than a fixed horizontal line. Stack a pullback to a rising VWA with bullish structure, momentum turning up, and a reversal candle as your trigger, and an institutional cost basis becomes a high conviction swing entry. So, anchored VWAP is the volume-weighted average cost since a key event. It acts as dynamic support above and resistance below, and you anchor it to the moment that mattered. By pullbacks to a rising VWAP, respect a clean loss of it. Subscribe for the full method and trade your own plan. This is education, not financial advice.